So, welcome everybody to this webinar with Mr. Patsky today. It's such a pleasure to be here today and to have this conversation with Mr. Patsky. My name is Ayushi Nahar. I'm currently a law student from India, and I think this webinar is really close to me personally because my project is on financial literacy itself, and it's also and I've been brought up in a family where my dad's like an investment guru and like he's literally done it all. So for me to have this conversation with you is going to be so enriching and so exciting. So on that note, let me introduce our speaker for today, Mr. Matsky. Mr. Matsky is a CEO and lead portfolio manager at Trillium ESG Global Equity Strategy and portfolio manager of the Trillium Sustainable Opportunities Strategy. Matt has over 3 decades of experience in investment research and investment management. Thank you so much for being with us here. And over to you, Mr. Patsky, for any opening remarks or what you want to address to the fellows.
So thank you, and very much appreciate the opportunity. And so we're just for some background on Trillium and myself, we're focused on integrating social and environmental and governance into the investment process. And if you were to look at the firm's founding, which was back in 1982, Trillium was founded by Joan Bavaria to provide for the financial needs of our clients while leveraging their capital for positive social and environmental impact in alignment with their values. And what was unique at that time was that there was I would say a belief system that looking at anything beyond financial information would be detrimental to financial performance. And of course, what we know 40 years in is that integrating environmental, social, and governance actually helps reduce volatility and enhances, particularly on a risk-adjusted basis, enhances returns. So the world's woken up to that fact. It's obviously becoming very mainstream. And just to give you a little snapshot of my own history and background in the space, I started my career at Lehman Brothers, and that was after graduating from Rensselaer Polytech with a degree in economics and a minor in computer science. And I was brought in as a technology analyst. And in the 1980s, I was moved to work in consumer research, doing consumer growth. And I started recognizing that there was a tremendous movement toward more socially conscious business practices that was emerging, particularly among consumer brands. We had the emergence of brands like Ben & Jerry's, The Body Shop International, Stonyfield Farms yogurt, and Starbucks and Whole Foods Market. And I started to do a lot of work incorporating environmental, social, and governance into the investment process, and built a business plan that back in 1988 was a unique approach at the time. And that was, I started discussing with the associate director of research at Lehman Brothers that I thought there was a tremendous opportunity if we could take this concept across all sectors and look at best practices in environmental, social, and governance. And we would be differentiating ourselves and create the first true socially responsible investment bank. The response I got was that, this again was from the associate director of research who I directly reported to. He leaned in and he said, "Matt, it's really nice you care about these issues. If you don't stop, it'll destroy your career." So my one piece of advice to all of you on this call is pursue your passion, pursue your dreams. Don't ever be discouraged by advice, because the old way is exactly that. And just because that's the way things have been done does not mean that's the way they should be done. And so we are depending, quite frankly, the human race is dependent on you coming up with ways to think about things, draw outside the lines, think outside the box, and work on solving, sadly, all the problems we're handing you. And I will say, from my generation, that's all we can say is I give you my apologies. I can tell you I've been working certainly for my entirety of my career on trying to make the world a better place, but we are leaving you with obviously some significant problems. So with that, I will say I have great faith that your generation is has passion about solving those problems, and so I look forward to the dialogue and your questions.
Thank you so much, Matt. And I think what you said was actually quite inspiring. And also, it reiterates the fact that there's nothing too hard to achieve. You just have to go towards it. And I think when it comes to investments and stuff, and people often think it's just about the money, it's like the traditional way or the conservative way of looking at it. But there's so much more to it. And how we can streamline this to enable things, I think you hit that really right. So I think that's great. So let's deep dive. And I would also request the fellows, if they have questions, please put it down in the chat box or raise your hands and we'll unmute you so that you can ask Matt himself. But I'll begin with a question of my own. So Matt, throughout your career, you worked in investment research and investment management, right? As such, what would you say is the role of socially responsible investing in driving social change and policy change in general?
So the investment class, if we can call it that, those who are privileged with making decisions about where money is put to work, have incredible power to influence change. We're allowed a seat at the table. We're invited into the room when others are shut out. And that really, it's our responsibility to use that power in a constructive and positive way. And we are interestingly welcome at the table of policymakers and welcome at the table of corporates. And that position provides just an ability that activists from the NGOs need our support and need our help in order for a lot of the advances, the progress that we need to make. And so it is absolutely critical. And so to just sort of put it in perspective on a recent victory, and I'm giving you a longer answer than you probably wanted, but we did an awful lot of work as for those in the United States, which obviously is a substantial portion of capital markets globally. We have had I would say it's a long-standing perception of it not necessarily being honoring your fiduciary duty if you are incorporating environmental social impact into the investment process. And it has been an issue within guidelines for retirement assets for a long time. There's been this struggle and this tension that has questioned whether or not you can incorporate non-financial metrics in without costing return. And in when you would talk to lawyers in particular who were overseeing 401k plans, other retirement asset plans, you would often hear, well, we really have to follow the guidelines of the Department of Labor and ERISA rules. And it's telling us that this is still questionable whether or not we can use these characteristics in an investment process. And so there has been a default to doing nothing. And what we've seen is that the aggregate of trillions of dollars in retirement plans have been invested in simple index product, which means people have ended up, not consciously, because this is not something they've made the decision on, but tons of the huge percentage of assets have been just simply invested in the broad market, meaning you own everything. And there is no responsibility for the impact of your money, though money has impact. And there was, our head of corporate engagement, Jonas Krohn, is also the head of the policy committee for US CIF. And he just spent time over the last several months with the Department of Labor, and they just did a change in rulemaking, which clearly defines the obligations of those who are overseeing pension assets to consider the impacts of climate change and environmental, social, and governance factors on the businesses they're investing in, calling out the reality, which is you are violating your fiduciary duty if you are not incorporating these factors into the investment process. You are violating your fiduciary duty by putting people into broad market index products. And that is a sea change that I think we're seeing, and it's one of the reasons you're seeing such momentum into assets flowing into strategies that incorporate environmental, social, and governance, and why you're seeing the emergence of recognition of investment dollars have impact, and we want that impact to be positive. And so there's just a beautiful recognition, and I get a little bit emotional about it because I've been working so long on this, and I'm always reminded that it was 25 years ago that I stood at a conference with 300 people in the room, and I stated that I thought we were at the point where we were at the tipping point where it was going to go mainstream, and we were going to see people recognize the significance of all of the positive impact that could be unlocked if we recognized the significance of this information. And I'll say it now, I wasn't wrong. I was just a little early.
I think that's actually such a great thing. I think you were quite literally on the precipice of change, if one looks at it a little earlier, maybe. And I think what you mentioned, the cultural shift within the finance industry and other aspects is actually really good. And given the context today with the pertinent matters that we're facing, be it climate change or anything, I think investment is going to be such an important part. So, all right. So our next question, your previous work in the area of research and social development has been really great and fantastic. How do you think research is essential for creating change, and how can you engage young leaders in this form of research?
So, we've certainly done, what needs to happen in a more substantial way is we still have a lot of work to do on moving the training that people get in finance and in the MBA programs. There's progress being made, and I certainly know many of you out there are saying, no, I'm getting an MBA with a specialty in sustainable business, or with a specialty in sustainable investing, and that's beautiful to see. It didn't exist when I was in school, but we need to get to where this is acknowledged as being necessary, and the old ways are no longer taught. That I don't have to ever hear that question again. of the incorporation of these factors into the investment process, because it's recognized that it's material and it needs to be done. And in order for that to happen, we need it's the students who are in school now doing their thesis work that have to prove it, that have to be able to demonstrate, quite frankly, to the many, many old white men who hang on to the notion that this can't be done. We have to disprove them with enough academic research and rigor in that research that they have been proven wrong. They are wrong. We know that. The real, the focus needs to be on tearing apart what is, the modern portfolio theory, and we need to demonstrate that modern portfolio theory is called a theory for a reason, and it is wrong, and we need to demonstrate that in a rigorous academic way. And so I guess that would be my sort of thought of where I think effort needs to be put. And 40 years of the risk return characteristics from Trillium certainly demonstrate it. Now we need to put it down in the studies that show and convince the rest of the world. And I have way too many stories of experiences where, despite the facts, I've been told that that this can't be done, or that it's wrong, or that the data I presented, which is audited, must have been fabricated, because there's no way it could be true. You couldn't have delivered better performance with reduced risk by screening out companies that were doing that had bad profiles in environmental, social, and governance, and yet it does work, and it is. And hello to the African Leadership University, by the way.
Yeah, that's actually really good to hear. I think your personal anecdotes make so much difference, because it's so hard to move against the tide, but it takes the effort. But since you've seen the entire trajectory and you stand here today and you're so proud of the work you've done, I think it's fantastic for all of us to hear it and know that it's possible. You just have to have the conviction in what you're doing. So if any fellows have a question, please go ahead and raise your hands. We're looking forward to more to what you have to say. All right. So I think I'll ask you another question till someone types something in the chat box. So the next question is, despite your established years in the private sector, you've continually led projects that have been aimed towards creating change, right? Even the one you just mentioned, actually. What advice do you have for the fellows that are willing to join the private sector and still, undertake social impact work? Because often it's looked at if you're in the private sector, there's nothing you can do to change the other side and have that altruistic characteristic. So what do you have to say?
Well, there's a need for advocates for social, environmental change and positive impact in every organization. And whether a small, private, or a large company, I think what we need to understand is all of these issues matter, and now what you need to do is find your voice and your role within introducing it within the organizations that you end up working for. And you could end up in, and I'm going to just make it as ugly as possible, you could end up in working for a backward-looking company with management that doesn't care, that's extracting fossil fuels in a remote part of the fragile part of the world where they're doing damage to the environment from the extraction process, in addition to damage from the fact that it's being burned. There's still a role for you to press for them to improve environmental outcomes, even in that environment. Now, I'm not suggesting that that's where you should go get a job. I'm just suggesting that I've had people come to me and say, well, I'm working for Occidental Petroleum. What am I supposed to do? And I'm like, be an advocate. Be pressing them on why it matters. Even looking at what the choices are in your 401k plan and saying, I'd like sustainable options in the 401k plan is a way of making change. The opportunity to influence and have positive impact is everywhere, right? It also is just in your day-to-day, right? In your choices of what you purchase. And so the same way that money has power in the investment world, that money has power in the actual purchases and decisions you make of which services and which products you buy. Just be conscientious about that. Make sure that you're making good choices, and that those choices are incorporating the environmental and social impacts of whenever you're making those decisions. It's like when you're making the decision of what to purchase for food, right? Source local, source organic, wherever you can.
True. I think like in our small way, we can do it, like you just mentioned, and also be that voice. It's like a quoting Gandhi. He's like, be the change you want to see. So wherever you work, try to take a little piece of what you are, what you believe in. So that's great. So we have David. Do you want to go ahead and ask your question?
So while we're waiting for David to ask the question, I'm just going to share a quote that hangs over my desk. It's also from Gandhi.
Oh, okay.
The earth has enough for everyone's need, but not for everyone's greed.
Exactly. And I think even like the entire study of economics is just based on that. Anyway, so yeah. David, go ahead. Start by introducing yourself and ask your question.
Hello, my name is David Daniel. Sorry, apologies, I won't be able to switch on my video right now. Anyway, my name is David Daniel. I'm from Nigeria. I'm at the Bello University cohort. Thank you very much for that quote. That quote, it's a little bit deep, and there's a lot of things to actually bring out of that quote. Thank you very much, Matthew. So my question is this: when it comes to investment and sustainability, right? Coming from the point of someone that invests, what do you look out for the rules that people in that particular project or business do? You understand? I didn't get what you understand. Whether you understand the question.
No, I understand. We get asked this question all the time, which is kind of what is your definition of sustainability and how are you applying it? Right.
Exactly.
And the answer is it's different in different industries, but what you're looking for as a general rule is you're talking to people in the context of what industry they're in, and then getting to whether or not they've been thoughtful about the environmental social impacts they're having, and whether or not they've set up the governance structure of the business to be proper in terms of making sure there are proper controls in place, proper in terms of having been thoughtful about diversity and inclusion in the way in which they've set up their structure. And so what do I not want to see? I obviously don't want to see a board that's all insiders. I want to see a board of outsiders. I want to see a board that has people who are experienced and have controls. I don't want to see a board where you've gone ahead and decided to put your three best friends on the board. I remember once seeing and this was a board of a public company, but I went down and sort of looked at the background of each of them, and I realized that they had gotten outside people on their board. They had literally, this founder, and it was of a nutrition company, had put the person who was his gardener on his board. He had put his own accountant on his board. His family lawyer, who had handled all of his estate planning, was on his board. That's not an outside board. That wasn't good governance. That was a sign of potential trouble, right? And so we want to see that you've got people like Sam on your board. We want to see outside people with experience that you're bringing in to strengthen a board and provide good oversight. But it's also, the intentionality is really important. So you sitting with a senior management team can understand whether or not they've been thoughtful about the environmental, reducing the environmental impact, improving social outcomes, and I always start. And this is just a piece of advice for those of you who are doing investing and anybody who's ever looking at, you can even do it just looking to work for a company, is always spend a fair amount of time first with HR, talking about how they think about recruitment and compensation and the systems, and talk about what the retention rates are. Wouldn't it be great to know before taking a job with a company if they have real high turnover? And so, because that's a red flag, right? And so I always find that fascinating, because for the almost 40 years now that I've been doing this, I tell you still to this day, when I go into a company and say my first hour I want to spend with the HR department, and now mostly it's not called human resources. Now there's usually lots of terms for talent recruitment, or it's like human capital management. But I always spend an hour with them, and I get told every single time, you're one of the only investors that has asked to speak to them. Well, that's sad, because it's obviously so important. So start with human resources. Start with the people who are closest to the entire process of recruiting, onboarding, and are responsible for retention.
Great. Thank you so much for that answer, Matt. David, I hope that answered your question. Do you have a follow-up?
Yes, I do have a follow-up. Thank you. So you talked about sitting with the HR department of a team. And so I wanted to ask, what are those key indicators that will indicate growth for you? And what will be red flags when it comes to not growing, or being stagnant?
So I'm not sure I quite understood that, but you're asking for when I'm talking to the HR department, what am I looking for and what are the red flags? Is that
what are the key indicators for growth, one, and then what are the red flags? Yes.
Yeah. Well, I mean, key indicators for them being able to handle growth, right, is going to be, certainly understanding of where they stand in compensation, particularly entry level, for relative to industry. And so we're doing basically some benchmarking, and that's also true with benefits. So what I'd like to see, and I'm just going to give you an example of an early stage company that I met with, where I sort of thought, wow, I think they really got it. And this was many, many years ago, and this is back in the late 80s. I met with a management team at a private company that was launching coffee shops. And the big competitors would have been just simply the diners and Dunkin' Donuts in the US. And they started off by explaining how they viewed the core of the customer experience to be based on happy and engaged employees. True. And that in order to have happy and engaged employees, they needed to recruit good people, and that they were paying, at the time, I want to say their starting wage was something like $2 above minimum wage. But that they had decided that since most of the likely employees were going to be part-time, they made the decision that they were going to offer both full healthcare benefits and stock options to part-time employees in addition to full-time employees. So they had an entire robust system of benefits in place to try to grow. Now, at this point in time, I'm going to tell you, it was unheard of in fast food in the US for anybody to offer healthcare benefits, period. Never mind offering it to part-time employees. And then the idea that you were going to share equity with part-time employees was equally unique and very, very unheard of, right? And of course, the CEO was Howard Schultz, and of course, the company was Starbucks. And we were early on investors in Starbucks because that differentiated approach, in our view, was a recipe for incredible growth, right? So we were looking for those indicators of they're building the right base of support in terms of how they recruit and how they retain people. I'll also point out that the turnover, the turnover for that industry is close to 100% annually. Starbucks' experience at that point was less than a third of that. So we were able to see it already, that there were these key indicators of being able to attract and retain people that was really, really critical. And so, and that's kind of what you're looking for. So, red flags, I'm going to give you another example, and this was just a bizarre one, but I was meeting with a manufacturer in Ohio, and I was asking I said, I've noticed that, your starting wages was it was slightly above minimum wage, but that, you have a waiting period for people to qualify to get on your healthcare plan and in your the 401k plan. And I'm not sure what's the reason, right? Oh, we don't want people coming in and getting on our benefits and then immediately turning, just because they're trying to tap into our healthcare benefits because they were coming in and they were already sick. It's really that's an interesting attitude, but then I noticed they did not have protections in place based on sexual orientation or gender identity. They had, by the way, over 10,000 employees. And they literally said, well, that's because we don't have any of them. And I'm like, really? That's pretty amazing. So kind of like the president of Iran who declared that there were no gay people in Iran, if you remember that one from years ago. And we're all like, yeah, right. I know gay people who live in Iran. It's and so, but anyway, so it's sort of major red flag. Of course, we did not invest in that business. Of course, we were walking away, but there's, just from that process, you learn so much. And it's and you haven't even left the HR department, then you get to, there's so many other things to learn. I mean, I've had experiences where it's gone really well in HR, and then you walk into the manufacturing floor and you realize, oh my God, this is a disaster. We cannot participate in investing in this company. But anyway, I will tell you, the dirtiest ice cream factory I've ever been in was in Dallas, Texas.
Wow, those were actually really great stories. It actually helped us picture how it goes on and why we should ask certain questions. Yeah. You
get surprises when you walk through companies.
Yeah, just listening to it is whoa, okay, and that actually happens. So yeah. So I think I'll ask Aryan Mishra to ask his next question.
Yep.
Hello, sir. Am I audible? Yeah.
You're on. Yep.
All right. So, first of all, thank you for this presentation. And I have 3 questions for you. So I actually did a bit of reading from the previous date. So I actually have 3 questions for you. First of all, one is that, how do you mention? I'll just introduce myself. I'm Aryan Mishra, and I'm from University of Delhi, India. and I'm working on SDG 4, promoting financial literacy amongst college students and high school students. So first of all, my first question would be to how do you maintain a balance between the profit motive of investing and then the social impact part of it. So how do you ensure that there's no compromise between those two objectives, like from the investor point of view and from the company point of view?
Yep. Well, in the question, there is a presumption of conflict, and I'm going to say the conflict is short-term and transitory, not long-term. So if I'm doing the right thing, it'll end up with the returns being better in the long term. And that decisions made that are, I'm not going to do what's right now because it is going to harm my profits in the short term, is going to end up biting you at some point. And I don't know when. And it could be that you actually are successful in pouring toxic chemicals out your back door, and it goes on for 20 years, but it is going to catch up with you at some point in time. And it might be that you just poisoned your entire family. Right? So I just point out that I think we get asked that all the time, right? Of what about the trade-offs? And I'm like, the trade-offs can seem real in the near term. They're not real in the long term. And just as I know, anyway, so I would just say that the right decision is usually going to end up being the most profitable decision when you're looking out over time. And I'll leave it there. But we run into this all the time with organizations, with that question. So I hope I answered it. But
yeah, definitely. I think you did. Aryan, do you want to ask another question?
He's got his hand up, but he's muted. So
I'm sorry, I was unable to mute myself. Yeah. Okay. All right. So my second question would be: recently, I read that that there's an ETF called BAD. That is basically betting alcohol and drugs, right? So I guess the company was Thematic Investments that listed this ETF called BAD ETF. So basically, they invest in companies which participating in betting alcohol and drugs. So how do you see that as a challenge for ESG investments or ESG funds?
Right. I don't know that specific fund. I do know that there was a fund launched years ago called the Vice Fund. And that's all they were doing was basically investing in companies that we generally screen out. So they were investing in alcohol, they were tobacco, they were, and we were brought on to, my memory was we were brought on to Fox News. And it was supposed to be us having like a mud fight, and we were supposed to be like going at each other as the Fox News model. And they brought on us as two portfolio managers to discuss our approach. And I started out with, in every industry, regardless whether the industry is inherently dirty or an industry that we don't invest in, that how you manage people, how you handle recruiting, how you handle the environmental social impacts you're having, and how you work toward minimizing those environmental social impacts is an indicator of quality of management, and ultimately will reflect in shareholder returns. And they turned it to the portfolio manager of the Vice Fund, who said, absolutely. And that's the reason why I always look for the best environmental social standards within each of the companies or industries I invest in. And for example, the reason why I picked Anheuser-Busch as my major brewery is because they have the strongest HR standards and recruiting, and have one of the lowest turnover rates, and they have the most robust recycling program, and on and on and on about all the environmental and social benefits that Anheuser-Busch had taken seriously versus competitors. And I just sort of sat back and realized, yeah, I think people are starting to get this. It's even within an industry that we may not want to invest in. And let's look at traditional fossil fuels. There are players who are handling themselves properly or better than, that are going to end up gaining market share over time, recruiting the better people, are going to better handle the transitions that are occurring, and are going to be where you want to invest. So could you design a portfolio of just investing in sin stocks, if we can call it that, and make money? Well, sure. There's not, that's not a way that you can't make money. You do need to ask, this is a question for people to ask is, well, do I want that exposure? So that's a choice. And I'm not trying to make a judgment call on everybody's choices, but I am saying one of the worst choices anyone can possibly make is to just buy an index fund and own everything. What does that say about the values that you hold with the impacts you're having on your money? Well, it's, I don't care. Now, most people, it's, I don't know, because most people really don't know how their money's invested. I hear that all the time from people. Oh, no, I'm in a target date fund. And I'm like, what's in your target date fund? I don't know. Well, 90% of a lot of the retirement plans in the US default to a target date fund, and target date funds should be avoided. They're broadly an index product, and they also generally have very high embedded costs. It is usually one of the most lucrative products for the asset manager who's providing the service. And so avoid target date funds. If you are going to use target date funds, there are now a handful that actually incorporate environmental, social, and governance. So at least use those, because those at least have been thoughtful about incorporating factors that are talking about the impact your money's having. And so, anyway, that would be.
Great. Aryan, I hope that answered your question. And I'll just take one last question from Aiden Walker. Yeah.
Hi, I'm Aiden Walker. I'm from Bentley University, studying SDG 17. I'm going into sustainable investing. So this is awesome for me. I love hearing about this. And obviously with over 3 decades of experience, you've kind of seen the ins and outs of everything. I wanted to know what you think are kind of the key values and most important things you'd like to see from someone going into this career, going into kind of the profit versus purpose in these companies. Thank you.
Great question. And thank you for the baseball cap. So I will just say this. I've always said, I can train somebody in finance. I can train somebody to understand accounting and know how to rip apart accounting statements. I can never train passion. And so what do I want? I want to know that you really care about the impacts you're having in the world. And so for us, that's been, I've found it more successful to recruit people who are coming out of the Peace Corps than who are coming out of Harvard Business School. So, and I hope that answers it, but I'm just like, I want to know what drives you, what motivates you, what you care about.
Thank you very much. I really appreciate it.
Yep.
Great. Thank you. Thank you, Eden, for your question. And if anyone else has a question, I know like you all had follow-ups. So if someone else want to ask, go ahead, type it in, or yes, David, go ahead.
Thank you very much. It's a follow-up question to when you mentioned manufacturing, and the previous guy from Delhi actually asked a question, and then you made a talk of standards, how they're important to investors. I'm also going to ask this: what of patents, and for a business that's just started in a local area, and okay, let me just give you a situation that you can understand. So, I and a team, we started a business converting pure water such as low density polyethylene into shoe polish. Now, every shoe polish being imported into the country in Nigeria is international. There's no Nigerian company that produces this product, and our narrative is that we're trying to, with one shoe polish you buy, you save the planet from plastics. And we've applied for investment, and I think we're students at the moment, and only few came back, and they've not given us a reason why. And I wanted to ask, we don't have a standard yet in the country when it comes to shoe polish production. So we're basically the first to produce shoe polish in the country. And now, does that play a part? And also, what do you think is the problem here?
Well, all right. So certainly, I think in that question you asked about patent protection, which is certainly important and something to pursue early on, and whenever you have a new concept, to make sure that you've filed for some protection so people cannot take your idea and run with it. But in terms of raising money, I'm just going to say this: it's very complicated to raise money early when you're starting, and every entrepreneur will tell you in the earliest days that it is a struggle, and that they found that and this is where your background plays, unfortunately, much of a role, which is almost uniformly you'll hear the story of, well, I really first had to go to friends and family, right? And you'll hear about the friends and family round. And, what if your friends and family have no money? What does that look like? And the answer is, it's obviously really difficult in the early days to raise any money if you don't have some someone in the community that you're of your friends and family that have the ability to help. But usually there's something there to get going, right? And obviously an awful lot of this is just simply the sweat equity, as it's referred to, of your own labor that gets early businesses started. And one of the other things I hear all the time from early entrepreneurs is they went and got another job in order to generate income to be able to basically get their idea off the ground. So you'll hear that often from people is, yes, I went and got a job at the bank because I could make a decent living and had the resources to be able to fund my dream and my idea. So early days, when you have a business plan and you're sending it out to venture capitalists or in this case, probably angel investors, and you're not hearing back, is no comment on the business plan, because they're generally speaking getting 1,000 for every one they're actually going to invest in. And many of them just simply get piles of and will look and then put it on the side. And so you oftentimes see things not see things not get funded, and no one should ever take, it's obviously not a great idea because nobody's willing to invest in it. Rejection is something, as an entrepreneur, you have to be ready for, right? And so, when I had my boss at Lehman Brothers, I recognize it's not the same level of risk, but literally he was basically saying, stop doing this or I'm going to have to fire you. And, my response was, I'm going to keep doing it and I'll go find another place to work if you fire me. And so I continued to write about it in every report I published. And so you just want to, if it's, it will, it may take longer than you expect to get outside funding, but, I would just say again, pursue what you're passionate about, focus on that being your what you're focused on, as opposed to worrying about the rejections.
Great. That was such a great answer. And I think what I actually got out of it was also that, you have to have your conscience in place with your conviction and your passion, and you're good to go. Like, even from your story, I think that's one thing that's so evident. So, Mr. Pat, I would request you to, have any closing remarks for us today. And I thank all the fellows for their questions. I think it's been a great session.
I would just say, I've said it already, and I think I'd end with that, which is we need you all to be aggressive about trying to solve these big picture problems that we're addressing, from climate change to income and inequality to and on, and I appreciate that all of you are committed to trying to be part of the solution, and it is your generation that gives me hope.
Great. Thank you so much. And I think you left us on really inspiring notes. So thank you so much for being here today. And thank you to all the fellows for being here as well.
Thank you all for participating, and appreciate your signing on today.